First up is Zakat Fitrah, which you can think of as the Ramadan wrap-up. Every Muslim handles this right before Eid. It is basically a soul cleanser and a way to hit the reset button on any mistakes or slip-ups made during the fast. It ensures that, on the day of Eid, nobody is going hungry. Traditionally, it is 1 sha of your staple food, roughly 5.5 to 7 pounds of rice or wheat. In the U.S., most people pay the cash equivalent, usually around $10 to $15 per person. Zakat Mal. Zakat Mal is a mandatory contribution on your accumulated wealth. It is specifically designed for assets that have the potential to grow, what we call productive wealth. Unlike income tax, which is based on what you earn, Zakat al-Maal is based on what you keep. For this to apply, 2 conditions must be met: nisab and hal. Nisab is your financial threshold. It is the minimum amount of wealth you must own before zakat becomes a requirement. This threshold is equivalent to 2.7 troy ounces of gold, calculated at the current market spot price. If your total qualifying assets stay above this line, you are eligible to contribute. Hal is the holding period. Your wealth must remain above the nisab threshold for 1 full lunar year, which is about 354 days. If your balance dips below the threshold at any point during that year, the clock resets. This applies to your net liquid assets, including bank savings, gold, stocks, and business capital. The standard contribution is 2.5% of that total wealth. Agricultural Zakat. Now, let's look at agricultural Zakat, which operates a bit differently. Because crops are seasonal, this zakat is due at the time of every harvest rather than once a year. The threshold to qualify for this zakat, the nisab, is approximately 1,440 pounds, or 653 kilograms, of raw grain or similar staple crops. If your harvest falls below this weight, no zakat is required. The percentage you contribute actually depends on your production methods and costs. For mechanically irrigated land, where the farmer has to pay for water pumps or irrigation infrastructure, the rate is set at 5% of the total harvest. However, for rain-fed land, which relies on natural rainfall or free-flowing rivers at no extra cost, the rate is 10%. This distinction is designed to be fair to the farmer. It accounts for the overhead and expenses involved in production. The more resources and money a farmer has to invest to get a yield, the lower the zakat percentage becomes. Livestock Zakat. Livestock Zakat applies to animals raised as productive assets, specifically goats, sheep, cows, and camels. This obligation is required only if your herd reaches a minimum size, known as the nisab, and has been under your ownership for 1 full lunar year. Keep in mind, this typically applies to pasture-raised animals that graze on open land. Let's start with goats and sheep. The threshold here begins at 40 head. If you own anywhere from 40 to 120 animals, the zakat is just 1 goat. This increases to 2 goats if you have up to 200 and 3 goats for a herd of up to 300. Beyond that point, the calculation is simple. You just add 1 goat for every 100 additional animals in your herd. For cows, the requirement kicks in a bit earlier, at 30 head. If your herd is between 30 and 39, the zakat is 1 yearling, which is a calf at least 1 year old. If you have 40 to 59 cows, it becomes 1 2-year-old cow. Once you reach 60, the zakat is 2 yearlings. From there, the amount scales up based on increments of 30 or 40, following established guidelines. Finally, there is the zakat on camels, where the threshold starts much lower, at just 5 head. Interestingly, for smaller herds, the zakat is actually contributed in goats. For example, owning 5 to 9 camels requires 1 goat, 10 to 14 requires 2, and it continues this way up to 24 camels. However, once you hit a herd of 25, the zakat shifts to 1 female camel that is at least 1 year old. Income Zakat. Income zakat is essentially a contribution made from any earnings you receive through your profession, whether it is a fixed salary or payment for specialized services. This does not just apply to office employees. It is for everyone. We are talking about doctors, consultants, freelancers, and project-based contractors. As long as the income is earned through lawful and ethical means, it is part of the calculation. Now, why do we talk about income zakat specifically today? Modern scholars introduced this framework to reflect our current economy. In the past, wealth was mostly tied to land, livestock, or trade. Today, most people live off their professional skills and expertise. The standard for this zakat remains consistent. If your annual savings reach the equivalent value of 2.7 ounces of gold, the rate is set at 2.5%. Zakat on trade. Zakat on trade applies to any commercial enterprise involved in buying and selling. This is calculated based on the total value of your business after one full lunar year of operation. To determine the zakat, you need to calculate your current assets. This includes your on-hand inventory, valued at current market prices, cash reserves, business bank balances, and recoverable receivables, which are outstanding payments you realistically expect to collect. From that total, you subtract your current liabilities, such as immediate business debts and short-term bills. This gives you the net working capital of your business. If this net value meets the threshold, equivalent to the current market price of 2.7 troy ounces or 85 grams of gold, then a zakat payment of 2.5% is due. These rules apply to every scale of business, whether you are running a small online shop, a local startup, or a large-scale distribution company. Next is Zakat Rikaz, which covers buried treasure, specifically ancient valuables like gold, silver, or precious artifacts found underground. For a discovery to be classified as Rikaz, it must be an ancient find where the original owner is long gone and can no longer be identified. Unlike other types of zakat, Rikaz is unique because it does not require a one-year holding period or any complex financial calculations. As soon as the treasure is discovered and confirmed to be ancient, 1/5 or 20% of its value is contributed as zakat. The remaining 80% belongs to the finder, subject to local laws regarding land and discovery. Let's look at zakat on gold and silver. While this is technically a part of Zakat al-Maal, it is often discussed separately because the thresholds are very specific. For gold, the threshold, or nisab, is 2.7 troy ounces, which is equivalent to 85 grams of pure gold. If you own this amount or more, and have held it for one full lunar year, the zakat rate is 2.5% of its current market value. For silver, the threshold is approximately 19.1 troy ounces, or 595 grams, with the same zakat rate of 2.5%. A common point of discussion is whether personal jewelry, pieces worn daily, should be included in this calculation. There are two main perspectives among scholars on this. Some experts believe that all gold must be accounted for once it reaches the threshold, regardless of its form. Others, however, argue that jewelry intended for regular, reasonable use is exempt, as it is treated as a personal possession rather than an investment or a stored asset.